Hello, guys, welcome back to TJ Crypto channel, your best crypto plug. Make sure to hit the like button, drop me a comment, and click the subscribe button down below. In today's video, I will be discussing Bitcoin whale dumps 59,000 BTC, nets massive $885 million profit. A Bitcoin whale recently dumped a whopping 59,000 BTC worth over $2.4 million after 3 to 6 months, essentially netting an impressive profit of $885 million. Bitcoin has continued to trade within a bearish trend since it collapsed on Jan. the 12th, bringing down the rest of the crypto market with it. This discouraging slump wiped out multiple support levels for the premier cryptocurrency, as it dropped to a low of $41.500. The crypto asset immediately recovered the pivotal $42,000 threshold on that day. However, in the following days, Bitcoin has struggled to retain this price level amid a sustained battle between the bears and the bulls. This trend has kept the asset down. Bitcoin whale sells 59,000 BTC. As sentiments remain low, Bitcoin is now witnessing a surge in sell-offs. In a recent significant development, a Bitcoin whale just sold off 59,000 Bitcoin tokens. Prominent market analyst Ali Martinez highlighted this move in a post today. Citing data from CryptoQuant's Bitcoin spent output age bands, Ali confirmed that the Bitcoin whale procured the 59,000 tokens 3 to 6 months ago. According to the analyst, the investor in question purchased the assets at an average price of $26,000. The Bitcoin spent output age bands is a metric that quantifies the total value of Bitcoin tokens spent or moved within a specified time period. The metric for the 3 to 6 month period shows 59,346 BTC on Ali's chart. This figure indicates that, yesterday, investors spent or moved 59,346 Bitcoin tokens which were purchased between 3 to 6 months ago. The 59,000 BTC dump is part of these tokens. A massive $885 million profit, at Bitcoin's 25-month peak of $48,969 attained on Jan. the 11th. Amid the bullish sentiments surrounding the spot Bitcoin ETF approval, the whale chose not to dump the tokens despite it holding a value of $2.889 billion then. A sale then would have yielded a profit of $1.355 billion. However, the investor's choice to hold onto the tokens signified conviction of a much higher price target for Bitcoin. Nonetheless, this has not materialized. The whale dumped the tokens yesterday, with Ali noting that he made a profit of $885 million. This figure translates to a sale price of $2.419 million, at an average cost of $41,000 per Bitcoin. Note that yesterday, BTC traded between $40,683 and $42,930, defending the $40,000 support while aiming to reclaim and retain the pivotal $43,000 resistance price. Bitcoin witnesses increased dumps. The 59,000 BTC sale is one of similar multiple moves. Amid the asset struggles, long-term holders and whales have been dumping their tokens. Bitcoin metrics such as the ASOPR, the binary CDD and exchange reserves, which measure BTC movements, all show unfavorable values. The Bitcoin ASOPR has a value of 1.04, showing that investors have been selling their tokens at a profit. In addition, long-term holders have been moving their tokens at a higher pace, as indicated by a binary CDD value of 0.57. Moreover, market participants have continued to send their Bitcoin tokens to exchanges. As a result, BTC reserves on exchanges have increased to 2,099,983.87, 2.09 million tokens. Miners are also actively selling their tokens, as the miners' position index hit a high 5.2 value. Bitcoin currently trades $4.41,029, down 3.44% over the last 24 hours. The asset needs to hold above the $41,000 threshold to hedge against more sustainable drops. Bitcoin's 24-hour trade volume has also surged 44% to $27, 121, 126, 640, $27.1 billion. Furthermore, BlackRock IBIT leads with $1 billion plus inflows, 4 days after spot BTC ETF products went live. Current data suggests that, 4 days after spot BTC ETF products went live, the BlackRock iShares Bitcoin Trust IBIT leads with over $1 billion inflows within this period. The U.S. Securities and Exchange Commission (SEC) approved the first batch of spot Bitcoin exchange-traded funds (ETFs) on Jan. the 10th, opening the doors for institutional investors to gain exposure to the cryptocurrency market. The spot Bitcoin ETFs are expected to boost the adoption and liquidity of the cryptocurrency market, as they provide a regulated and convenient way for institutional investors to gain exposure to Bitcoin. BlackRock IBIT leads in daily flows. 4 days after the products started trading on the open market, one ETF product stands out from the rest: iShares Bitcoin Trust IBIT, managed by BlackRock, the world's largest asset manager, with over $10 trillion in assets under management (AUM). According to J.A. Martoon, a verified CryptoQuant author, IBIT has attracted more than $1 billion in inflows, equivalent to 25,000 BTC, in the first 4 trading days. Martoon shared this information on X, citing data from BitMEX research. The second most popular ETF product is FBTC from Fidelity Investments, which has received $884 million in inflows, or about 21,000 BTC. The other ETF products that have seen inflows are Bitwise BITB, $373 million, 21Shares ARKB, $278 million, and Investo's BTCO, $135 million. GBTC neutralizes high spot BTC ETF demand. However, not all ETF products have fared well in the market. The Grayscale Bitcoin Trust, GBTC, which was previously the dominant vehicle for institutional investors to access Bitcoin, has suffered a huge outflow of $1.627 billion, or about 38,000 BTC, in the same period. This indicates that investors are switching from GBTC to the new spot Bitcoin ETFs, which offer lower fees. Recall that Grayscale's amended filing with the U.S. SEC showed that the firm set a fee of 1.5% for the GBTC. For context, other firms have fees ranging from 0.19% to 0.25%. Charts provided by Martoon show that IBIT has consistently had the highest inflows on each trading day, with day 2 witnessing the single largest inflow for the product, at $386 million. Meanwhile, GBTC has had the highest daily outflows. Other products have also recorded daily inflows. BITB saw $237 million positive inflows on day 1, while FBTC witnessed $359 million on day 4. Investor demand for the spot BTC ETF products has surged, but it has been neutralized by the selling pressure from GBTC. Notably, the product saw $625 million inflows on the first day of trading, but dropped to $222 million on the second day. The third day witnessed the first daily outflow of -$41 million. However, day 4 saw inflows of $474 million. Notably, these figures would be higher without GBTC. The cumulative flow of all ETF products has increased from $625 million on day 1 to $1.28 billion on the 4th day. This means that the products have triggered the purchase of 30,000 BTC at the current average BTC price of $42,000. The BTC ETF market recently surpassed silver. Thanks for watching this video and supporting my channel by giving me a like, dropping me a comment, and subscribing to enjoy more existing updates.